You need to somehow figure out a way to let capital go to places where it needs to go, right? Because it deserves it, not because whatever arbitrary societal pressures there are. And so the simplest way was private equity. How do you create or expand this asset class, but instead of only allowing a certain group of defined people or institutions to invest, how do you let a lot of people invest? And to me, that was a jobs act, the ability for specifically non-accredited investors to invest in private companies. So I think that's what motivated me, and the rest is history. A blockchain requires no people. It's a thing with the most trust because it is trustless. By me trying to make impact on a small group of people that I really care about, I'm doing what I can, which I happen to be very, very fortunate and lucky to have a lot of great people around me that help me what I have. I do have, let's call it a narrow, unique knowledge and experience in this idea of fintech, regulations, crypto, and combinations of technology and things like that. How can I use that to improve life for my children?
By 2030, alternative assets could reach 17 trillion globally. Traditional finance is burdened by inefficiencies and exclusivity, from inaccessible investments to outdated infrastructure. The barriers are many, but one visionary entrepreneur is tackling these issues head on. Democratizing finance isn't just an idea, it's the future. And today I have Youngro Lee on the show. He's president of Brassica BitGo RWA and managing director and head of BitGo Asia. Welcome to the show.
Thank you, Chris, for having me. It's exciting.
Yeah, I'm a big fan, as you know, of alternative finance and going all the way back to the early days of Bitcoin. So it's been really interesting to track, but you've really actively played in the space. So, I mean, what inspired your journey into fintech entrepreneurship?
I mean, it's funny because you mentioned Bitcoin, but as you started out, there's $17 trillion of alternative assets in 2030. And I know you, in addition to Bitcoin, you were OGs investing in startups and angel investing before that was probably a thing. Mm-hmm. So if you really think about the category of, let's call it non-public investments, it's just been, as you know, over the last, 20 years or so, or we probably did even before then, it's been a massive growth. For me, I mean, we got to kind of go back a few decades now, but when I was growing up, obviously, like I didn't come from a business background. My family or business finance. I was just like any other guy, like going through school. I did go to law school because I thought I wanted to be a lawyer, and I did start practicing lawyer for 8 years, doing corporate law.
That's more than a start.
So yeah, it truly is the foundation of everything that I've done in fintech. But coincidentally, my first day in law was on Wall Street at a Wall Street law firm in 2007 summer. And you may remember, many people may remember, that was actually the first crisis of my lifetime. We call it global recession. It's crazy, right? And I think that was the
trial by fire.
I mean, we've gone through different ups and downs since then, but really that was the starting point for my journey, I would say. Because if you think about the 2007, I was in my early to mid 20s. A lot of people my generation, it was almost like everything that we were taught and learned in college and professional schools changed overnight. And if you look back to the history, obviously Bitcoin, as a direct result of those crises was a product, but so did the growth of what we really call, the big tech and especially Web2 companies as well, like Facebook, Google, all these companies, really, really accelerated after that period. Uber, obviously social media. So, I mean, we can talk about this forever, but in general, I would say my initial shock at kind of entering the professional capital markets world as a lawyer, and what happened in that global financial crisis and global recession around that time, and seeing what the trends were around that time, that's probably the starting point for my journey.
Well, what is your definition of democratizing capital, and why does it matter?
Yeah, definitely in today's environment, some people take it a little bit politically. I'm not. The word democratization shouldn't be a political word. To me, what that means is creating opportunities for everyone, right? It's no one's fault or problem that someone was born wealthy or someone was born not wealthy. Like, that's life. Like, it's been the case for millions of years. But if you can, no matter where you came from, if there is an ability for someone to take advantage of the opportunities to become something better than what they started with. To me, that's actually what moves humanity forward. What makes people, aspire to something else. That's the basis of the United States of America. So to me, if you think about that logic, and partly is because I'm, in my own background, when I was coming from a regular family in Korea to US, not having the opportunities in US or access to certain things in US, like all I wanted was an opportunity. Like if I just had that job, if I just had that opportunity, if I could just have this thing, I know I can do something. So I think that to me is kind of the spirit that I wanted to, like, that's my like personal life mission. But then you apply that to the reality. I'm not saying it's good, but the reality of capitalism. What does that mean? Okay, you need to somehow figure out a way to let capital go to places where it needs to go, right? Because it deserves it, not because it, whatever arbitrary societal pressures there are. And so the simplest way was private equity. How do you create or expand this asset class, but instead of only allowing certain group of defined people or institutions to invest, how do you let a lot of people invest? And to me, that was a Jobs Act, the ability for specifically non-accredited investors to invest in private companies, which has never been done in recent kind of modern history securities laws. So I think that's what motivated me, and the rest is history.
It's interesting, right? Because the dollar essentially went from being based on gold to being essentially a digital asset. Yeah. And nowadays, I use very little cash. Yeah. I don't write any checks. Yeah. If I'm looking at my bank balance, I'm looking at a number, right, that just exists virtually in space. Right. So I don't know why people get so twisted up over like what digital currency is, because it's like the dollar is essentially digital. We transfer it. It's just that there's a lot of friction points on it that shouldn't be there. Yeah. Whereas like with a crypto, like Bitcoin, I can transfer it to you at 2:00 in the morning because I feel like it. Yeah. Whereas at a bank, you got to go jump through hoops and everything else.
Yeah, but, you basically the payment mechanism. I mean, this is also something that I'm sure you hear a lot too, as someone who's very familiar with the space. Like people always complain, what's the utility of Bitcoin? What's the utility of crypto? And like, the obvious thing is you transfer value. Mm-hmm. I mean, that, to me, that's the most fundamental value of digital assets. So you mentioned money. If you look back to kind of history of money, the very first iteration was bartering, right? Like you had a thing. I had some fruits, you had some, I don't know, wood, and we would trade. But if we have, our perceived differences value of those things, like we can't actually trade because how can we?
2 chickens for a horse or whatever, right?
So, so that's obviously when money came about. At first it was physical goods like seashells, and then you see the iteration of that eventually settling in gold in modern times, and then eventually people are like, oh, that's stupid. And so it became money. But all throughout the history, like this is literally 5,000-6,000 years of history, all the way from Mesopotamia to today, the common denominator was you trust that thing that you were using in place of the bartering because someone, literally, some institution or some person was vouching for it. That's what it was, gold and now dollars. So the irony here is that a blockchain requires no people, right? So it's the most trust. It's a thing with the most trust because it is trustless. Mm. That's a concept I think people have a hard time understanding. But if you really think about it, like, yes, we trust people, but like, we also don't trust people. Right?
And it doesn't have an institution that's controlling it per se. Which is why so many institutions are against it. Because like, wait a minute, we're losing control of the financial transaction system. But I mean, it is also interesting, right? I mean, at some point, the guys on the island decided that cowrie shells were going to represent some amount of value because they were rare, and everyone agreed that they were worth X amount, right? It's the same thing with the digital asset. I mean, or you go to like, oh, here's a piece of paper. Now it has value because we printed on it and it says United States.
I think so you nail a really important point. And that's, I think, looking back to my history, like I think that's where I've been able to kind of take advantage of it. Not because I tried it, just world kind of shaped that way. Like what you and I are talking about, there's been technology innovations, right? Internet was first. It allowed transfer of information. And then blockchain, it allows transfer of value, which is just revolutionary in my mind. But that's really a technology revolution. And so the early adopters, as you know, of Bitcoin are technologists. They're comfortable with it. The rest of us, I myself included, I wish I bought Bitcoin 2014. I did not. We need some other thing or process to be comfortable with it. And that is government, right? That is regulations, and that is systems. And I think the reason why there hasn't been as much adoption, although now you argue there's massive adoption, is because the regulation always is, it is what it is. It's slow. It follows reality.
At SoftTech, we don't just follow the trends, we set them. As the founder and CEO, I've built a team that excels in delivering cutting-edge solutions in software, hardware, and IoT. From concept to completion, we're the partner that turns your tech dreams into reality. SoftTech, where innovation starts. Well, how does Brassica play a role in modernizing the financial infrastructure? I mean, is it a bank? Because you said that was kind of like, you see a lot of these new banks coming up, Neobank and others, right, in FinTech. A lot of innovation going on in the FinTech space that probably a lot of people don't understand but or are aware of. But what is Brassica?
Yeah. So Brassica, when we first started, we literally started a Wyoming state chartered public trust company.
Okay.
Because trust companies, whether federal or state, are and banks and trust company in almost every state is regulated by the same agencies that regulate the banks. It's the only legally approved, I guess, company that is authorized to be a fiduciary to different clients' assets, to protect those assets and get paid for it, basically. I'm sure a lot of people, they don't think about it, but when they work with a brokerage firm or just asset management firm, someone is holding your money. In US, there's a concept of qualified custodian. I don't want to make it too legal, but long story short, there's a lot of regulations, rightfully so, on who can protect and hold your assets when you're doing different activities. So I guess that's the angle that I was coming from. The crypto world, the original iteration, obviously they didn't care about that. The whole point, in fact, the value was you didn't care about this. So literally, you mentioned no one's there. That's DeFi, right? You literally didn't need anyone.
You held your own tokens wherever you wanted to hold them.
And I think technologists like yourself probably thought about this a lot, but the average person who got into it, a lot of them probably lost money because they got hacked, they got stolen. Like, this is a massive problem in the industry. And that's, you see the benefits of the regulatory action. So for me, having not the technology background of crypto, but the legal background and operational background of regulated institutions, like I have my broker-dealer licenses, RA licenses, trust company licenses. If I can provide that legal protection that makes people feel secure about what their assets are and where they are, but I can find a way to integrate that legal protection with technology innovations, I can potentially provide best of both worlds. And so that was the original thesis. But that's what I started with, the mission. And then soon after I started the company, Brassica, I knew the founder and CEO of BitGo personally before then, and someone I really respected, both the individual and the company. For BitGo, for people that clear, they are the world's leading independent custodian. Second only to Coinbase if you consider all custodians. Now over $100 billion of assets in the custody. So like the fundamental reason why they have that is because they do care about the technology and they care about the security. So knowing that that's something that I didn't obviously have as a 1-year startup, and knowing that I want to eventually get there, when the opportunity presented itself to maybe work with this company and the CEO, I like any entrepreneur, you got to make a decision. You never know, when it's a right or wrong time to sell or do anything. But at the time, it felt like the right decision, and I'm glad I did, because now the world has transitioned even more rapidly, in my opinion, towards positive adoption. Like Bitcoin today, obviously, not even the price of Bitcoin today versus a year ago, although obviously it's gone up a lot. But I think it is adoption, right? The fact that we have ETFs, I think now it's like 60 billion. Like it's the fastest growing ETF in the history of ETFs, faster than gold. And I think someone estimating a few years, it will actually pass the entirety of gold ETFs. So seeing those adoption and seeing the interest from average people, not just the technologists, into this asset class, I'm excited. I'm excited about what we can do.
Well, so 1 year into Brassica, that's when you did this transaction with BitGo.
Correct.
It's an interesting point too. Like, as a startup founder, how do you really know, selling too early, selling too late? Yeah. Was it an acquisition or
it was an acquisition. And we joined. I guess this is one thing as a founder. Really. So I worked in 4 startups. BitGo is not really a startup, but it's still, we think of ourselves as a startup. As you know, it's hard. It's really hard, right? And when I first started my first startup, I was just over 30, and we went through almost 6-7 years of truly pain and suffering, right? My first company, Nextseed, as you may know, we were actually an investment platform that were allowing people to invest in small businesses, local businesses, so your restaurants, bars, gyms, hotels. Something that was really passionate about, because people can invest in local community and see how their money can actually change their neighborhood, their block. Among other things, as we were trying to, at the time, do digital capital raising growth and a lot of strategies, COVID hit. Mm-hmm. And it almost, people almost like, we all have short memory. Like a lot of people just even forgot about COVID. But if you remember, the first couple months of COVID, we thought the world was ending, right? Before tech and crypto became a thing. Yeah. But one of the key things that I recognized back then was, a lot of the startup journey, no matter what you do, it depends on external circumstances. I knew that, but this time I felt it. And so having gone through that journey, what I recognized was you have to take opportunities when they come. That may be in the form of acquisitions. It may be in the form of the business partnership or hiring. True story. When I started Nextseed in 2014, my first angel investor, I'm not going to mention the name, was a key member of one of the leading crypto companies back then. And he told me in 2014, 2015, after I raised my first seed round, family and friends, with $370,000, like, hey, I think you guys should really look into Bitcoin and think about how you can possibly tokenize the revenue sharing securities we're doing, because I think that's a way to basically democratize. I remember thinking that sounds really cool, but I've come too far. Can't pivot now. I got to finish this journey of building an investment platform for the masses, and didn't buy any Bitcoin and didn't think about it. While the angel investor is very wealthy these days, doing I have no idea what. So my second time around, I mean, both when I joined Republic and worked there for a few years, and Brassica, like my mentality is completely different, right? It's like you gotta be open to opportunities. You have to be very, very flexible. Cannot make assumptions. You definitely can't be stubborn as a CEO. And at the end of the day, it's like no one's never like no matter what anyone says, like no one's ever sure, right, about the business decision. You make your decision and you live with it, and then you hustle, try to do the best you can with the then new circumstance you're in. So that's been my approach.
Yeah, you don't really know as a founder, but you do have to take some of those opportunities and really decide which way you're going to go with the other. Because there are founders. I remember a watch company that was doing really well and had an acquisition offer, and they decided not to take it, and it was like a lot of money, like $100 million or $1 billion. And then, 1 year later, they're worth nothing and out of business. Right. And so it's like there's a certain amount of timing and luck involved. Same thing happened to me when a company was interested in acquiring a business I had in Belarus. And I'm thinking, well, how many times is someone going to actually approach me about acquiring a business in Belarus? Well, probably not that often. Right. And so it's like, I really need to see if this is something that could actually work. There is that fork in the road, like they say, and understanding when's the time to take it and when's not. What kind of legacy do you hope to leave in democratizing finance?
So I this is also as I get older. I have kids now. Definitely my perspective changes. When I was younger, what I wanted to do was to just to be candid, like, be known to have made a big positive impact, right? Like that's what drives me. It wasn't the money, it wasn't the status. It was just like the knowing that like I was able to create something that impacted a lot of people. And that's why I think I was always attracted to these big ideas and big things, like changing the private capital markets. Like how much bigger can you get? Right?
So impact.
Yeah. I think as I get older, I still want to make the same impact, but the scope of who I want to make impact actually decreases, right? Like especially family, like more than anything, I want to make sure I provide for my family, for my kids. And I think that's a balance that I think everyone goes through, especially entrepreneurs as they get older. Like how do you balance that pipe dream versus reality? But if I combine those two, it is kind of both, because I am, and I never actually understood this when I was younger, but now I get it when older people would say like, I want to leave a better world for my children. Like I actually now know exactly what that means. Right. So I am prioritizing how do I take care of my kids, for example. But the way I do that is to, in fact, have to create a better place. right? So instead of like trying to solve this big vision and then any trickle down effect everyone does, like by me trying to make impact on a small group of people that I really care about, I'm doing what I can, which I happen to be very, very fortunate and lucky to have a lot of great people around me that help me what I have. I do have, let's call it a narrow, unique knowledge and experience in this idea of fintech, regulations, crypto, and combinations of technology and things like that. How can I use that to improve life for my children? Because if I can do that, I'm pretty sure as a byproduct, I'll also improve it for a lot of other children's. And then it comes back to the same thing. Like, how do we utilize the new technology to improve the overall quality of private markets, to create investment opportunities for a lot of different people that might not have had the chance before, to create ability for really deserving companies and thoughtful companies to raise capital better, easier than they could before without, shady middlemen in between. And by doing that, coming back to the same thing, we're creating opportunities. Right. So if I can be a small part of creating more opportunities to more people, whenever my time is done, I hope I'll feel like, okay, I did something.
Yeah, well, I like that approach.
Yeah.
You bring up an interesting point, and it's a little bit of a tangent.
Yep.
But as you know, the population is going down.
Yep.
Right. People aren't having as many kids anymore. Yep. We're below the replacement level in the U.S. It looks like the U.S. is going to be better off than a lot of countries that are in kind of a world of hurt now for the future generation. But one of the points that they were making was exactly what you're talking about. Because the younger generations are not having children. They don't get it as far as like, how do I build a better future for my kids? And so they're not necessarily focused on doing that. And they're actually more indirectly, sometimes maybe not on purpose, but they're more, personally or selfishly oriented versus like, I need to build the future because I have kids that are going to be living in the future and that this will impact all kids. Right. But I don't know how you solve that problem per se. But
this is my favorite movie is Jurassic Park, and there's a good quote, Ian Malcolm, I think. Life finds a way.
Yeah.
And coincidentally, now we have this thing called AI and robots, and maybe AI agents. I mean, like that's a whole different topic. But I actually don't think it's a coincidence, right? However you think of whether you believe in God or not, like. Life somehow finds a way. And yeah, of course, AI and robotics will play a key part in literally serving the needs of people. But this is where I think, at least I think, the application of blockchain is even more important. Because when you're trying to get these applications of AI and robotics, and at the end of the day, like there's got to be some system that they run on. Blockchain is where that system can theoretically run with no one involved. Right, which is very, very different than the traditional mechanism of someone needs to still put it, punch in a button somewhere. So I do think that and we're already seeing this, but the growth of AI and robotics in generally, especially if they are interacting with networks and different kind of cloud infrastructure, like it's blockchain. That's it. There's no other solutions that can kind of provide that scalable infrastructure.
That's super interesting, and I hadn't thought about that before. Basically, blockchain combined with AI and AI agents and robotics as a solution.
I mean, so this is where I think when people talk about, I mean, I'm just faced with this argument because I've been a founder in this space for 10 years. What it really means is I've been raising money for 10 years, right? And I've had to pitch so many different kinds of people on so many different things. And one of the key, even now, I think criticism, some fair, but a lot of them not fair, that the blockchain industry get is like, what's the utility? And this is where I'm thinking, like, was anyone, like, to me, like, they're thinking about what it is today, and they're not imagining what could be. And we don't, obviously, if everyone did that, then there is no society anyway. But for at least the entrepreneurs and really thoughtful investors out there, I think that's the key. Like, the question isn't what's the utility today. The question is exactly what we talk about the childless issue. The question is like, what could be the utility in the future? And that's the name of this podcast, right? You're forging the future. So you got to do something.
Well, true. I think that a lot of people just group blockchain and crypto together as a thing,
right?
But blockchain is a specifically separate technology that can be applied to things like AI.
100%. I mean, cryptocurrency is literally a tiny piece. It's a result of applying blockchain technology. But as you know, there's so many different types of applications that's already underway and probably will be accelerating a lot in the next few years, especially because of AI.
While we live in the future, I think it's going to be an exciting decade.
Absolutely. Yeah, I hope so.
Well, thanks for sitting
Yeah.
down with me. Super interesting discussion. I do have some socks for you.
Great.
They are not crypto socks, but they are financial socks. So
Amazing.
here you go.
All right.
So, thanks for
This is
coming
good
on the
luck.
show.
Thank you for having me.
Yeah, definitely.
Okay.
I know how important staying informed is for innovation and growth. The Forging the Future newsletter brings you the best in tech trends, startup advice, and industry insights. Join our community and forge your future with us. Subscribe now.